Alright, guys. Hello and welcome to my presentation in which I talk about how to trade like a professional, okay? To start off, the first things first. Trading is a profession, okay? You have to remember that. People go to university to learn trading and becoming like technical analysts or even work for hedge funds, right? Finance, economics and everything. They all are paths that lead you personally to working potentially for either a hedge fund, a bank, or anything like that, right? Even though you need market experience, people still go to university to learn to be a professional trader, okay? So that's something that's very important, okay? Risk management is crucial, okay? Risk management is the key component of longevity in trading, and losses are impossible to avoid, okay? I'll get on this a bit later on in the video because this is very important. And last but not least, it's whoever's best at keeping the money type of profession, okay? So it does link to the risk management, but this is a key component. If you have a mentality in which you want to keep your profits more than anything, this is your type of profession, okay? If you know how to keep your money from trading, you are a professional. Anyways, next slide. Limits over markets, okay? What's a limit order? A limit order is basically when you book a specific price to be able to get filled later on and then execute from there, whether it's a buy limit or a sell limit. Limits are way better because they give you the best possible fill and the best risk to reward ratio. I'll expand on this later with a live example. And market orders, they are good, but they potentially can give you less risk to reward, and depending on spread and everything, they might give you a least preferable fill. Okay, with the limit orders, the market comes to you instead of you chasing, right? And with the limits, you have the least amount of money lost compared to potential market orders. You choose your own stop loss based by your technical analysis. I'll get onto this on the live because it's very important. So let's talk about Murphy's Law now, okay? It's basically a saying that says that anything that can go wrong will go wrong, okay? This saying, more than an actual law in physics, is to make you understand that preservation is key. You can't always be right. Make the right decision and let go of the outcomes you don't have the control over, okay? If you use the concept of using limit orders rather than market orders, you can have a bit of control over your outcome, because whether it's a loss, it's not going to be a major loss if you know how to position yourself quite well, right? Remember, anything that can go wrong will go wrong, okay? Just make sure that you're prepared for it. That's it. And let's go on a live, okay? Alright, there you go. So we're on TradingView right now. So, first things first, yeah? Hypothetically speaking, let's say I wanted to do a market order right here to target this low end, right? I'd be putting my entry just around right here. I'm gonna just take out all my indicators right now because we don't need them. And this is my market order right here. You can see that I'm in a bit of a drawdown and my risk to reward is quite high. It's quite low actually. So I have a negative risk to reward in this situation, right? I did go in for a sell right now, so it might hit my TP, but the eventuality of it hitting my stop loss can be high as well, right? This is a 50-50 scenario. But let's say I had my limit just about here on this unicorn model, right? Just about here, okay? Let's say I had my limit right here. I am waiting specifically for the market to go for my fill rather than me chasing price. Because right now I might be in profit. That's fine. But if, let's say I got filled in here, my profit would have been already high, right? And look at how much money I'm making with this limit being above instead of me chasing price at the moment. And look how much my stop loss would be. So right now we're comparing $128. In this case, I'm on CFDs. We're comparing $128 potential loss to a $300 potential win, right? This is a very important thing. Once you make the switch over from market to limit, you will have the best best risk to reward ratio. And I'm not even gonna lie, it is very true. So for the sake of this video, right, I'm gonna just keep my stop loss just around here, right? And that's gonna be my limit fill, okay? So with this stop loss being here and this market order being here, I do have a bit of a higher risk to reward ratio. It's just a little bit below the 1 to 2, but there you go, it's 1.84. So that's my risk to reward ratio. I got filled in around here. There you go. And I'm just letting price run, okay? Even though I don't get filled here, I'm still being patient, right? Because the market gives you the setups and you take what the market gives you, okay? You don't jump in when you want to. You want to jump in when the market tells you to jump in. So in this case, when price hits here with my limit, I will jump in, okay? In this case, this trade hit stop loss as we had equal lows right here, relative equal lows. And we also have another pool of liquidity right here as well. So yeah, pretty funny stuff. Let's talk about whoever's best at keeping the money type of mentality, okay? So whoever's best at keeping money mentality, okay? So let me just highlight this and put it just around here, okay? Let's say in this trade right here, right? I am at 100 profit, okay? Let's say I'm cutting my trade at 100 profit. There you go, boom. I made 100 from here, right? What I want to do is I want to half my risk, right? So I'm using at the very minimum, not the very maximum, 50% of my profits to make even more profits, because the markets can run a couple of points below, right? And I'm using my profits as a buffer to be able to take on a bit more profit, right? Because profit is profit at the end of the day. But if you keep on sizing the same, right, you potentially can make more money, but at the same time, you're costing yourself your own capital as well. As an example, right? Let's say I was in a market short right here, right? I literally got turtle souped by the markets and I was in a drawdown right here. And that drawdown could have made me FOMO out and I could have lost some money right here, right? So that's the most important things. If you limit your risk and you want to FOMO get out, you'd be probably losing around what? Let's say I'm in a sell right now of a limit of 2. So I'm on a sell, there you go. And I just close around here. I'll be losing about $16 for a reward of around $54, right? But if I had 4, I'd be losing 32, right? That is still a lot of money. Even though it's below the 50% level of my total profits, that is still a lot of money. Whilst with this one, I would have made 54, so in a certain way, made 50% of my gains right here, right? If this did hit DP in this case. And the risk to reward ratio is quite good as well. But anyways, let's dive into an example, okay? So let's say this was my trade original trade, right? And let's say I do hit TP in this case. So I'll probably go in at around this rejection block right here. There you go, right here. I'm just gauging this. I like the way this order block formation is. So I'll probably go for a limit at around 50% of this. So I've got buy limit right here, and I put my stop loss just around here for a profit just around my entry point. So I probably did miss the trade, but I don't care. I'm waiting for price to come to me, right? Anyways, I think we're nearing this entry right here. So let me just gauge that. I've halved my risk as you guys can see here, and I'm literally risking $63 to make 157, right? So I could lower it again to go for 50 at the very least, and then go for 157 still. That is still a 1 to 3 risk to reward ratio. So I'm playing with my profits to be able to make more money. And let's talk about Murphy's Law and how to act with it, right? Anything that can go wrong will go wrong, okay? So let me just write it down, okay? And let me anchor it as well. So anything that can go wrong will go wrong, right? So how do you protect yourself? First things first. Think. Do I need this trade? I've made $100 just now, right? I've made 100 96 just about now, right? Do I really need this trade? If I say yes, then you know what, I can still carry through with it. I don't mind. I can still carry through, right? But I'm waiting for my trade setup to happen. I'm waiting for me to get tapped in. If I don't get tapped in, then that's not one of my concerns, okay? What I can do is I can like decrease my limit right here. So if I get tapped another time, I'll be able to like get a better fill. But at this time, I've already missed my trade, okay? Anything that can go wrong will go wrong. So let's say I don't know, like let me just delete all my drawings, yeah. Let's say I just went short right here, right? Let me just put it like this, okay? Let's say I went short right here, and I put my stop loss at the high right here. So let's say I got filled in. Look, this wick is probably gonna take out my stop loss right here. So I'm in drawdown already, and I was trying to chase for a short, right? So anything that can go wrong will go wrong. If I see a reversal right here happening, then that's me at fault because I've chased price, okay? So that's why you have to prepare yourself. You have to set your limits. You have to be like, okay, if price hits this, I'm tapped in, I will carry through the trade, okay? If it doesn't, then that's it, okay? I know that anything that can go wrong will go wrong. And that's why I'm not gonna go with a market order, because it's honestly gonna put me at a disadvantage, and it's gonna make me risk some money as well. And that's literally it, okay? I hope you guys liked the video. Please do leave some feedbacks of what I should do next, and how I should make my videos, the formats and everything, and how I can make my content even better. Thank you very much for watching. I'll see you guys in the next video. Bye bye.